Bitcoin has surged above $62,000 as a crucial U.S. crypto bill gains momentum in Congress. This development could reshape the landscape of digital assets and institutional investment. Here's everything you need to know about today's pivotal event. Looking ahead, the next steps for Bitcoin and the broader crypto market are critical. Bitcoin recently experienced a notable surge, prompting analysts to predict potential resistance levels. In the short term, Bitcoin may test the $63,600 resistance level. A successful breakout could lead it towards $65,000. This movement is crucial as it reflects investor sentiment and market confidence, particularly in the wake of increasing institutional interest. The cryptocurrency market has been marked by fluctuations, and understanding these resistance levels is essential for both traders and long-term investors. In the medium term, the stakes are even higher. If the proposed U.S. crypto bill passes, institutional inflows could surge significantly, potentially driving Bitcoin's price to surpass $70,000 by the fourth quarter of 2026. This legislation aims to provide clearer regulatory frameworks, which many believe will attract institutional investors who have been hesitant due to the current lack of clarity. Such clarity could lead to a more stable investment environment, fostering trust among potential investors. However, there are inherent risks involved. Should the bill stall or face significant opposition in Congress, regulatory uncertainty could resurface, pushing Bitcoin below $60,000. This volatility could deter retail investors and exacerbate market fluctuations, leading to broader economic implications. Additionally, the impact of this legislation could extend beyond Bitcoin itself, potentially benefiting other cryptocurrencies like Ethereum and Solana if the bill includes provisions for smart contracts and decentralized finance, DeFi. Such provisions could enhance the overall ecosystem, driving innovation and adoption of blockchain technologies. Investors should closely monitor congressional updates on the bill and Bitcoin's ability to maintain its ground above $62,000, as these factors will heavily influence market movements. Ultimately, the passage of this legislation could mark a transformative moment for the cryptocurrency market, paving the way for unprecedented growth and stability. The trajectory leading up to today's significant crypto developments has been shaped by multiple factors. In the second quarter of 2026, Bitcoin faced a 14% quarterly loss, reflecting the broader weak macroeconomic sentiment. This decline comes amid ongoing concerns about inflation and global economic stability, which have led investors to adopt a more cautious approach. Additionally, softer U.S. jobs data eased fears of interest rate hikes, which in turn boosted risk assets like Bitcoin. Investors are increasingly viewing cryptocurrencies as an alternative asset class, particularly in times of economic uncertainty. High-profile political pressure has emerged, notably from former President Donald Trump's successful crypto ventures, which generated over $1 billion in 2025. This unprecedented success has prompted lawmakers to consider regulation rather than outright bans, signaling a shift in the political landscape surrounding digital currencies. Notably, JP Morgan recently warned about the risks associated with corporate Bitcoin strategies, emphasizing the urgent need for robust regulatory frameworks. This warning reflects a growing concern among financial institutions regarding the volatility and unpredictability of cryptocurrencies. The interplay of market dynamics and regulatory considerations is complex, as stakeholders navigate the balance between innovation and risk management. The potential for increased regulation could reshape how businesses and investors approach Bitcoin and other cryptocurrencies moving forward. With the landscape rapidly evolving, industry experts predict that clearer regulations could lead to greater institutional adoption of cryptocurrencies, ultimately stabilizing the market. As regulators and financial institutions continue to grapple with these challenges, the future of cryptocurrency remains uncertain. However, if lawmakers can strike the right balance between fostering innovation and ensuring consumer protection, we may witness a new era of growth and acceptance for digital assets in the financial mainstream. The recent momentum surrounding the U.S. crypto bill marks a significant turning point for the cryptocurrency landscape. As lawmakers push for regulatory clarity, the potential implications for crypto investors are profound. This bill aims to create a structured framework that could alleviate existing legal ambiguities, a factor that has long deterred institutional investors from entering the market. By clearly defining the status of digital assets, the proposed legislation seeks to provide a stable environment for exchanges and custodians, which could ultimately encourage corporations to adopt cryptocurrencies for treasury management. Historically, the lack of regulatory guidance has been a major obstacle for institutional participation in the crypto market. Large investors, including pension funds and exchange-traded funds, ETFs, have remained on the sidelines, cautious about the risks associated with unclear guidelines. The potential passage of this bill could pave the way for substantial inflows of capital from these entities, providing much-needed liquidity and stability to the market. Furthermore, a defined regulatory framework could mitigate risks associated with securities lawsuits and the possibility of exchange delistings, which have plagued the sector. The impact of this legislation would extend beyond just institutional investors. Retail investors, too, would stand to benefit from a more secure investing environment. With clearer regulations, the fear of capital flight to jurisdictions with more favorable regulations could diminish, allowing U.S.-based investors to engage more confidently with digital assets. This increased participation could enhance market dynamics, potentially leading to higher asset valuations and greater market resilience. The implications of the crypto bill stretch into the realm of innovation as well. A clear regulatory structure is likely to encourage the development of new financial products, such as crypto-backed loans and stablecoins, which could further integrate digital assets into mainstream finance. Looking ahead, the successful passage of this crypto bill could signify the dawn of a new era for the cryptocurrency market in the United States. As regulatory clarity emerges, we can expect a surge in institutional adoption and innovative financial solutions that cater to both retail and institutional investors alike. The actions taken by lawmakers in the coming months will be critical in shaping the trajectory of digital asset investments for years to come. On July 6, 2026, Bitcoin's price stabilized above $62,000, testing resistance levels between $63,100 and $63,600. This price movement comes amidst reports of a U.S. crypto bill gaining political traction in Congress, signaling potential regulatory clarity for the digital asset space. In the last 24 hours, Bitcoin experienced a slight decline of 0.85%, yet it has risen by 5.13% over the past week. Meanwhile, altcoins like EOS and Cardano have seen impressive gains of 10% and 12%, respectively. Notably, the momentum for Bitcoin briefly faltered at the $63,300 mark, indicating a critical point for traders and investors. The proposed U.S. crypto bill aims to establish a comprehensive framework for regulating digital assets, addressing long-standing concerns regarding security, fraud, and market manipulation. This legislative effort has garnered bipartisan support, a rarity in today's polarized political climate, highlighting the growing recognition of cryptocurrency's importance in the financial ecosystem. The renewed focus on regulation is driven by the increasing mainstream adoption of cryptocurrencies and the need for consumer protection. Investors are closely monitoring these developments, as regulatory clarity could lead to increased institutional participation, which has historically driven prices higher. The impact of these legislative changes could be profound. If passed, the crypto bill may not only stabilize prices, but also attract new investors who have previously been hesitant due to regulatory uncertainties. Additionally, established financial institutions might feel more secure in offering crypto-related products and services, further legitimizing the market. The recent uptick in altcoins suggests a broader bullish sentiment in the crypto space, which could be bolstered by favorable regulations. Looking ahead, the outlook for Bitcoin and other digital assets remains cautiously optimistic. As traders analyze the critical resistance levels around $63,300, the market's reaction to the evolving legislative landscape will be pivotal. Should the crypto bill advance, we could see Bitcoin breaking through these resistance points, potentially reaching new all-time highs. Conversely, Any delays or setbacks in the legislative process could lead to increased volatility and uncertainty. Investors will need to remain vigilant as they navigate this rapidly changing environment, especially as the influence of regulatory frameworks unfolds in the coming weeks. As we anticipate the outcomes of this crucial U.S. crypto bill, what do you think will happen next for Bitcoin and the broader market? Share your predictions in the comments below, and don't forget to subscribe for daily deep dives.